The real risk of cryptocurrency, something to be aware of, more to be cautious about, red flags going up across the market, and living to 100 is becoming a reality for more and more. Can you afford it in your retirement? All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts, Mark Stimpson, Casey Elkins, Craig Roth, and Steve O. Flynn. You can find them all right here in Seattle at Elevated Financial Management. They've got well over 42 years combined experience between these four, and it's about helping their clients get ready for retirement. Certified financial fiduciaries, a website that is a resource. Check it out, efmnw.com. That's all letters, efmnw.com. You find links to the TV show, our radio show, and podcast form. Really good information on retirement planning, background information on the team. I'm Morgan Patrick. Again, pleasure to jump on. And guys, as I always do, just real quickly, Casey and Mark, how was the week?
Oh, it's been great. You know, we've been really busy, which is exciting. We've taught some retirement classes recently, so gotten to see a lot of new faces. You know, we're out at the local colleges really frequently. We're out at Renton Tech, Bellevue College, Green River, Highline, a couple other venues. And so we teach these retirement classes, Social Security classes. If anybody's interested, you can go to our website and sign up for them there. We actually have a couple coming up next week as well. And so, you know, it's really exciting for us because the main reason that we do this show, that we do our TV show, is to try and educate, right? It's to try and help people, give them the power that they need so they can make decisions and start figuring out how they can build their retirement and be successful, right? Because people are worried about it, and it's almost this taboo subject that we're not supposed to talk about, right? So it's something where we do talk about. We talk about it a lot, and it's really nice because it does gives us the opportunity to get to hear from people and hear what's going on for them, right? Hear what they're worried about. And it's been a wild ride in the stock market, and a lot of people are worried about that. We're going to talk about it on the show. So no, it's been really good. We've been really busy. It's been great, and we've been able to help a lot of families recently, which is always exciting.
Yeah, in fact, to go along with what Casey just said, we have a class Casey and I will be teaching next Wednesday and Saturday morning. Haven't done that in a while, and we're going to focus a little more next week on Social Security. It'll be a bigger part. We always deal with Social Security, but yeah, we've got a new class that we're going to be teaching. We're at Green River, correct?
Yeah, Green River.
Green River next Wednesday and Saturday. So if you're interested in maybe seeing a new workshop, come and see us. We'll be glad to have you. And again, we don't charge for those classes. So again, keep the checkbook at home. So we're out there trying to educate folks so that they can have a retirement that they can be really proud of and know that it's going to be successful.
Yeah, and the details for those workshops, for that one that Mark mentioned and for any others that we teach, you can find on our website, efmnw.com, efmnw.com. You can see a full list there. You can register the details, the dates, the times, everything.
Well, and just a barometer for our listeners, guys, what's been the attendance level at some of these? I mean, people are concerned.
They are. Yeah. You know, it comes to mind, actually, we taught one at the LeMay Museum, which is really cool, right? The car museum down in Tacoma. And we had about 100 people in the room. And so, you know, people are concerned. People are trying to figure out what to do. And like we said, there's a lot of questions. And it's kind of interesting. You know, finance is such an interesting thing because people they really don't talk about it with their family. Sometimes they don't even talk about it with their spouse. And so it's this very kind of intimate conversation. But, you know, we really try to shed light on it and make it okay to talk about and make it okay to not know the answer to every question. And that's really what folks like us are here for, is to help start to build that plan so that you have the confidence, so that you can start to take action, so that you can put something into play and pull the trigger and retire and enjoy that time that you've been waiting for. But, you know, we see so many people all the time that have saved so well. We see people that have saved probably double what they actually need for their retirement, and they continue to work because they just don't know how long it's going to last. And, that's probably the biggest question that we get at these classes is how do I make my money last? How do I take the income? And how do I make sure that I don't outlive that income in retirement? So, and that comes from folks, really sharp individuals, right? Yeah. Folks that have made a career for themselves and had a wonderful savings and are very, very intelligent folks. But this is just its own beast. Finance is its own complicated scenario, and you've got to understand all the ins and outs and how all the pieces work together.
Well, and it's such a, when we start talking about elevate your wealth and elevated financial management, and you guys, we jump on and we talk the importance of planning on the radio. You guys have your TV show. You're doing these classes. You're out there. You're in the community. And the opportunity to take full advantage, Seattle, wake up. This is it. You can sign up for one of these classes. Obviously, you're listening to our radio show. You can tune into the TV show. But use these resources. They're complimentary to you to get started and see if you're on track for your retirement. Stop wondering. Stop guessing. Find out. The opportunity to grab one of our appointments is coming up, so stay tuned for that. And one of the cool things about this show is not only do we have the four-headed monster of Mark, Casey, Craig, and Steve, we get the latest from the retirement community as far as articles. And this is what people are talking about right now. And the first article that we're going to hit is the real risk of cryptocurrency. Everybody's talking about it. A lot of people are nervous about it. A lot of people love it, swear by it. But guys, you wanted to talk about it. So Casey, why this article first?
Yeah, well, here's one of the things that I want to talk about is there is a lot of confusion about crypto. We can't tell you how crypto comes up in our office and clients go, I don't understand that stuff at all. Don't know what to do. Don't care about it. It's unimportant. Well, for a lot of us in this industry, this is something all of us as fiduciaries better get a handle on because it's coming, it's already here, and it's established. But what I wanted to share, this is a concerning article. So this individual, John Henderson, is talking in front of over 1,000 fiduciaries and estate planning attorneys at a major educational event. And an attorney approached him after this conference was done, came up to him and conveyed a story to him that is very, very chilling in a way. This person had been involved in crypto. They had their own self-custodied wallet. We call it a hot wallet. And she even knew the seed phrase, but somehow the wallet became damaged and the value in this wallet was $3 million. And the scary part about this was the husband had died, and now how are they going to recover this? As Casey will talk about it here in a second, it can be unrecoverable. And the bummer for this situation was there was 4 beneficiaries. And so this really complicated things. And this is something I just want to bring up today because I think crypto is becoming more and more, I don't want necessarily to say popular yet, but it's something that people are investing in. And we're going to talk about this a little bit more. Casey, I know you probably have a thought about this as well.
Yeah, I mean, it is here to stay, right? And the article makes that point. We've talked about it before. And here's the deal, right? I get that it's a scary thing to talk about investing in something that you're unfamiliar with. But I think at the same time, most people have an understanding of stocks, right? And how that type of investing works. But there's a lot of nuance to stocks that people also don't understand, right? So I guess maybe to make the illustration that there's this boogeyman in the closet, which we talk about a lot, but that doesn't necessarily have to be the case with cryptocurrency, right? It really doesn't. And in the future, I think everything is going to be digital. So it's better to start looking into it now and start understanding what it is, because eventually I do believe that will be the standard in our country of how funds are exchanged, how things are traded, and how assets move from one location to a next. And it doesn't have to be scary if you take the time to understand it.
Absolutely, Casey. It's really comes down to a matter of trust, doesn't it? Just like so many other aspects of our activities in our business and how we help our clients. The article there goes on to talk about how people were convinced to move their cryptocurrencies to fraudulent sites, to fraudulent wallets, and the scale of the problem is amazing. There are estimates that more than 20% of Bitcoin's total supply is lost or unrecoverable.
Billions.
That's billions of dollars
huge.
gone.
Yeah.
So finding, somebody in some place that you can trust to help you with this very important asset in the future is very important.
Oh, it certainly is. And, having a partner in this, there's so many of you out there that are sitting on portfolios. That's not a plan. Working with a firm that does this on a daily basis. When you have questions, you can get answers. You have somebody walking with you down this path. That's what we offer through this show, powered by Elevated Financial Management. Mark, we've got a certain number of appointments. We've got 10 of them. We're going to open those up right now. What's going to happen if they call us?
Yeah, if you're listening and you just heard us talk about cryptocurrency, maybe you have questions about that, you have concerns, but more importantly, what about taxes? How are you dealing with taxes right now, and possibly the thought of a Roth conversion helping you? There's also the thought about how am I going to make my income last through retirement? Is it guaranteed? So please pick up the phone, give us a call. You're going to leave your wallet at home, and we're just going to have a conversation. So please, if you're listening, give us a call. Let our team talk to you about taxes, Medicare, Social Security, cryptocurrency, taxes. We're going to talk to you about all these things, and I promise all we're going to do is have a conversation. We may be able to help, but we may not. But please, just pick up the phone, give us a call.
Here's the phone number, 866-668-3625. Again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. 866-668-3625. Again, 10 appointments. They'll go fast. 866-668-3625. When we return on Elevate Your Wealth, investors beware. Red flags are going up all over the place when it comes to the stock market. We'll talk about it next. Welcome back into Elevate Your Wealth. Your hosts are Mark Stimpson, Casey Elkins, Craig Roth, and Steve Flynn. You can find them right here in Seattle, Elevated Financial Management. It's all about helping you with your retirement. The team's got well over 42 years combined experience helping those clients get ready for retirement. They're certified financial fiduciaries. The website, it's a resource. Check it out, efmnw.com, all letters, efmnw.com. There are links to the TV show. Our radio shows are in podcast form. There's an events tab. You can click there, find out what events are coming up, and you get signed up for those. Again, they're all about being in the community and helping with retirement, so check it out, efmnw.com. I'm Morgan Patrick. We get into these articles and it gets you thinking about your own retirement. We're going to give you an opportunity to get on the calendar with Elevated Financial Management. The appointments we open up through the radio show, they're complimentary, meaning you're leaving the checkbook or wallet at home, all right? Well, actually, you need to bring the wallet because you probably got your ID in there. So I would definitely bring the ID. But no, the point is, it's complimentary, it's educational, and it can lead to empowerment when it comes to your retirement. Just knowing more information than you had when you walked in. Grab one of our appointments when we make them available. All right, so this next article, Steve Flynn is with us today in studio as one of our guest hosts. And Steve, we're going to start with you on this one. Investors beware. I mentioned it as we teased this segment. Red flags are going up across the stock market. This jumped out at you guys. Why are we going here?
Yeah, and we're feeling it already. Yeah, the recent news like NVIDIA as earnings really jolted the market in recent times, and that can make investors extremely nervous. So, yeah, and just looking at the article here, it says, we haven't heard this for a while, like bear market. We've had such a bull run, but we do speak about it in our classes, and we do, just prepare investors for a bear market. Mm-hmm. And typically, the cycle is every 5 years. And typically, the drop is close to 40%. It's about a 38% drop. And you've got to ask yourself, whether you're getting close to retirement in that retirement red zone, how would you feel if your portfolio dropped by about 40%? It's a significant number. And interestingly, a client who listens to the show called me this morning. We'd had a conversation, we'd done a review, and we actually de-risked quite a large percentage of his portfolio. But of course, he's worried about the news in the market, sees it's gone down about 5%, and just wanted a call to reassure him, is the plan still in place? And 2 months ago, if the market had gone down 5%, he would have been extremely exposed to that. That was would have been a considerable drop in his portfolio. But now, since having a plan in place, we have de-risked a lot of that money. There is still some in the market, but is certainly not affected by a 5% or even 40% drop.
That's exactly right. Yeah. And, we see that a lot. We do. And people are kind of constantly worried about the market, no matter how bullish you might be. I think everybody has some sort of feeling of like, well, it could go the wrong way at some point, right? Or it probably will go the wrong way at some point. And I just want to back that up with what this article says, because I think that this is so interesting. It talks about a Bank of America monthly survey that went out to global money managers. And it talks about how a good majority of them, the quote from the article is that they are enormously bullish on stocks and are taking on very high levels of risk in their portfolios. That's what the article says. Then the very next paragraph, at the same time, a majority of those surveyed tell the bank that they think stocks are overvalued, that artificial intelligence stocks in particular are in a bubble, and that the bursting of that bubble constitutes by far the biggest individual risk to the market. So we have two very conflicting opinions from global money managers. I mean, these are the brightest, right? These are very intelligent folks that study these things, and this is what they do day in and day out. And so you have kind of this, again, very conflicting information. And if you watch the news, you have very conflicting information. And if you look at your investment statements and your investment accounts, 401ks, IRAs over the last few months, 6 months, a year, you have very conflicting information, right? So where do you go to figure this out? I think the summary here is we don't know, right? That's really it. Nobody knows for sure. We can speculate, we can talk about it, we can be excited about the potentials, we can be scared about the potentials, whatever it is we think is coming. We get that, but our point being that we don't know what's going to happen. You need to have a plan that's going to make you successful regardless of what the market does, and allows you to spend even if the market does stumble or have some trouble for a while, or maybe has a large correction like we've had many times before. But whatever it is, it's the plan that gives you the confidence to deal with those type of things.
I think something to keep in mind here is this. We're talking, I love this point, 170 money managers that are handling over $500 billion in assets. Now, that is a big number, right? Mm-hmm. But the article says that these warning flags are becoming increasingly harder to ignore, and that this survey shows that there's an alarming level of complacency among the people managing many of the world's top investment institutions. So again, like Casey mentioned, there's a lot of confusion. There is complacency, but there's also warning signs, because I think one of the largest bond managers in the world, listen to what he says. He was actually the so-called bond king. He warned about market danger ahead and urged investors to move a remarkable 20% of their portfolios into cash or short-term treasury bills. Now, this is coming from a bond, person that is a giant voice and a giant investor and controls a lot of the bond market, or works in the bond market. He thinks the average investor holds too much of their money in stocks, and especially U.S. stocks, and too much in bonds as well. And he's saying, we talk about this, the warning signs are popping up all over the place, and we could get ourselves into a little trouble if we don't pay some attention here. I think, Craig, you got a thought.
Yeah, thank you, Mark. It's all about this fear of missing out, right? And this is a normal human sort of reaction to things. No one wants to be the first to jump off the bandwagon, as Brett says in his article. There's an old game we used to play as kids called musical chairs, right? And everybody wanted to have that last chair. I remember years ago in the great financial crisis, former CEO of Citigroup, when they asked him why he didn't take action before the big drop, he said, you have to dance while the music is playing. Yep. And I suppose, for some that's true, but for many of our clients who have already been dancing for 30 or 40 years, it's okay to take it a little slower and reduce the risk of going over the cliff.
Mm-hmm. Yeah, that's it. I think people get used to the risks that they're taking, and it just starts to become normal, and you start to feel like, well, I this risk is what's made me successful. Mm-hmm. That's great, and there's a lot of truth to that. but that's not necessarily what will keep you successful in retirement, right? That's really the struggle behind this, is that as you're moving toward retirement, the strategy that has gotten you to where you are is not the same strategy that will keep you going and in the right path, right? We talked about this before, but people scaling a mountain, right? It's a different strategy going up than it is coming down. You ever tried running down a hill? It doesn't go very well, right? So you have to be very careful about that risk that you're taking and make sure that it is intentional and that really it's not the same risk that you took when you were 25, because it needs to be different.
Well, and I tell you, you can wrap all this up. You guys hit all the points, because when you think about it, Steve started off saying, look, every 5 years it kind of corrects itself. We haven't had one in a while. So the fear of missing out, or we're drunk from our success, as Craig and Mark have talked about, we're in it. We're so in it, we're almost too close to it. And, you got to be able to step back from it, because a correction is coming at some point. What is your risk level, and can you handle it?
Right. And
yeah, I just, there was a great saying here from Wall Street. I love this saying. It says that a bull market doesn't end till the last bear turns bullish. There's a lot to that, right? So again, I think there's something you need to think about. The bear, it's a great saying. It's always okay till it isn't, right? And I think that's a territory we're coming into. It may not be, it's continued for a long time, but we're going to get ourselves into trouble if we don't start thinking about this more.
Yeah, and a lot of people do have a recency bias, like you were talking about, Morgan, right? That really is the case. And again, it becomes comfortable, right? And it becomes, well, this is what I've been doing. And so you kind of build this tolerance to the risk. But when things start to get rocky, that tolerance disappears really fast for most people, right? So if you've been taking risk up to this point, it's time to reap the reward. That's really our message, right? You don't have to take that same level of risk forever. Not that you just want to eliminate it completely. So if you're thinking of this, you're worried about the risk that you're taking, or maybe you're not even worried about it. Maybe you just don't know what level of risk you're taking. This is an opportunity for you to figure it out. We will sit down. We'll do a complete analysis for you. We'll look at the risk you're taking. We'll pull a bunch of reports, but we'll help you read those reports. We'll help you understand the risk that you're taking. And is it the right type of risk? Is it at the right time in your life? And does it make sense for where you want to be in your retirement? And it's not just market risk. It's tax risk. It's risk as far as legislation goes, and different types of accounts, that how they're taxed in retirement, and what you're going to do for Medicare, all those things that you're concerned about. We'll sit down. We'll have a custom tailored conversation. We'll figure it out one-on-one. So this is your chance. This is your opportunity. Don't hesitate. Give us a call.
All right, this is the phone number to call, 866-668-3625. That number again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And again, this is complimentary, no obligation to become a client. Take action right now. Take that first step, 866-668-3625. Again, 866-668-3625. When we come back, we're going to talk about longevity. Can you afford it? That's next. We are back on Elevate Your Wealth. Your hosts, Mark Stimpson, Casey Elkins, Craig Roth, Steve Flynn. You can find them all at Elevated Financial Management. 42-plus years experience between these four, and it's all about helping their clients get ready for retirement. Certified financial fiduciaries. I'm Morgan Patrick, I'm kind of the referee on this show. No, I'm kidding. I mean, we get on here and we talk about retirement topics. We have a little fun along the way, but this is serious stuff. It is about your future. It's about your plan, or maybe lack thereof. The opportunity to come in and talk about that. It is ongoing during the course of this show. These are complimentary appointments. We'll tell you about them as we move through. But again, see if you're on track for your retirement. And sitting on a portfolio is not a retirement plan. Or if you're headed down the pathway with an advisor or an advisory team, but you're frustrated, your calls aren't being returned, your appointments are getting bumped around, go get a second opinion. You can use one of our appointments for that as well. So we've hit some pretty good articles already today. We've talked about the real risk of cryptocurrency, talked about the stock market and the red flags that are popping up all over the place and your risk level. And now we're going to move to longevity. And Craig, we're going to start with you on this one. Living to 100 is becoming a reality for a lot of people. And now the next question is, can you afford it? That is the big article.
Living to 100 is becoming a reality. Can you afford it? The odds of becoming a centenarian are growing, and we often talk with clients about how to prepare for that possibility. There's a great article here. Richard Eisenberg points out that in 1950, there were just 2,300 centenarians in the U.S. In 1990, 37,000. Today, there are over 100,000 people that are over 100 years old. And in just 30 years, there could be almost 500,000. Some of the older folks you may know today. Dick Van Dyke is kicking his heels up about turning 100 in December. And Mel Brooks, one of my favorites, is 99, has a Spaceballs sequel coming in 2027. How's that for planning for the future? And is producing a very young Frankenstein pilot for FX.
Yeah.
You may also have seen Warren Buffett, famous investor, one of the icons in the industry, is stepping down as chief executive of Berkshire Hathaway in December. He'll be 8 months shy of turning 96. So there are a couple of points that we talk about in our workshops very often in designing plans. Our target is to try and make our clients have money when they're 100 years old. And people often ask, how long might I expect to live? And it kind of depends on how old you are right now. Right? If you're 40 or 50 years old, chances are that you'll live into your 70s. But if you made it to 65, chances are you'll live into your 80s. And that's another difficult uncertainty about preparing for retirement that we address.
Yeah, I think it's important to understand that the U.S. now has more centurions than any place in the world, which is unusual. Japan per capita still has the highest number of centurions, but the the bottom line is, people are living to 100, and everybody we talk with says, I'm not going to make it to 100, Well, for the bulk of us, we don't know that for sure, but we know that is one of the fastest growing segments in the world right now. So again, to say that it can't happen to you could be a fatal mistake when it comes to your finances. And this is something we all have to keep in mind.
So there's two things I want to share here. So Mark, whenever we teach a retirement class, you share a story about Ida Mae Fuller, right? First person to collect Social Security. And so at the time, and I'll rely on you to answer this for the show here. So how old did you have to be to start Social Security when she started?
65.
So you had to be 65. And what was the life expectancy at the time?
63.
Okay. So if you were expected to pass away at 63, but you had to be 65 to start Social Security, that's not good for Social Security, right? Like, something is very wrong on that math. And here's the point and how this relates to this article. If you're building your retirement and you plan it to 90, but you live to 91, that's a serious problem, right? And it's the same story. And we see the struggles that Social Security is having. Everybody's concerned about it. It's a lot of conversation. And it's because of, realistically, poor planning. I mean, that's really what that comes back to. And so here in the article, under the subheading, how to avoid outliving your money, because that's really the summary of everything that we're talking about here, right? If we're talking about folks potentially living to 100, what we're really saying, at least on this show, is how do we make sure your money lasts to 100 or potentially longer, right? And so the very first sentence under that subheading is, the best way to address the money side of longevity is to create a plan. And then it goes on to say that plan should be, how do I have enough lifetime income that I know, regardless of how long I live, that I've got a paycheck coming in until I pass away?
Yeah.
The value of that cannot be overstated in the conversation of longevity. That is exactly what we talk about. And that's why this article stood out to us so much, because it all comes back to planning. It all comes back to having a plan that gives you the confidence that maybe you do live to 100. And you know what? The article even talks about how there's a lot of people that don't want to live to 100, right? I think it was less than 50% actually say that they want to live to 100. But if you do live that long, all the other risks, Social Security running out if you're concerned about that, the cost of healthcare, the cost of long-term care, the impact that inflation has, market risk, all of those things get amplified the longer that you live. And it all comes back to having a plan to make sure that you can be successful.
In fact, to go along with what Casey just said, we talk about longevity risk being the greatest risk multiplier. And it's the one that probably gets talked about the least, but it could end up causing the most severe problem for anybody in retirement, right? Because like Casey just mentioned, how many bear markets might you have to live through because we live so much longer? What about the need for long-term care insurance? We talk about this in our book here, Break the Glass. And so, again, the same way with taxes. What are taxes going to do? Most likely going to go up. There's not much doubt on that. So, again, this risk multiplier is huge when you think about it. So longevity, you better be talking about it and better be incorporating some sort of longevity risk into your planning. Otherwise, it's going to be a disaster because you're most likely going to run out of money and be dealing with what we talk about all the time, the pain of regret.
We are going to continue the longevity conversation, but this show is about helping the Seattle community get ready for retirement. And a lot of it is going to be a surprise. So you need to be able to plan for all these what ifs. We've given you a number of resources already today on the program, but here's another one. We've got a book out, Break the Glass, and it is something you can really kind of lean into when it comes to retirement planning. BreakTheGlassBook.com is the website, and the show and the firm, Elevated Financial Management, which brings you Elevate Your Wealth, has put this website up so you can go to it, sign up for this book, and they're going to ship it out to you, and it's complimentary. So again, it's BreakTheGlassBook.com. Casey, jump on real quick, talk about this book, the reason you wanted to make it available to everybody.
Mark and I wrote this book together. We're very proud of it, but what I'll say is what's different about it, right? Because I think that's what makes it valuable. It's not a financial textbook. It's not meant that way. It's really meant for folks that listen to our show. It's meant for folks that come to our retirement classes. It's meant for folks that want to educate themselves and be empowered to start making decisions about their retirement. And so it's written in plain language. It's not financial jargon with the intent of talking over anybody's head. It's really meant to be understood and to give you some foundational knowledge and hopefully give you the ability to start thinking about how to address the concerns you have, or potentially even letting you know certain concerns that maybe you don't have that you do need to pay attention to. And so that's really the purpose of the book. And again, it's something that we're very proud of. It's a quick, easy read. You can go to breaktheglassbook.com. We'll send you a copy of it. If you come in and see us in the office, we'll give you one while you're here. If you come to a retirement class, just let us know you listen to the show and we'll give you one at a retirement class. But that's really the purpose behind it, is just to give everybody some information and, again, to educate, because that's what all of our different avenues are about, is about teaching, about educating.
Well, it's another resource for you. Again, check it out, breaktheglassbook.com. Go there, sign up for it. They'll ship that book out to you, breaktheglassbook.com. All right, gentlemen, let's get some closing thoughts just on longevity, how important it is to not overlook it. I mean, we've got a little extra time because we're living longer. Craig, we'll start with you. Closing thoughts on longevity.
Thank you, Morgan. One thing we haven't spoke about yet, but we have in the past, how many of us know somebody who retired and had to unretire and is now working at Walmart or Home Depot or at a grocery store part-time because they need to supplement because their money's running out?
Yeah, I just want to piggyback that. That is something that I think all of us, we know how many seniors we see working at Walmart, right? I appreciate Walmart a lot because they will hire seniors. Those of us that are in that market, we have clients that are looking for work right now for exactly what Craig mentioned. They went, and it could be, tough times that have happened, but a lot of it is because they didn't plan. That's really what ended up being the problem. They didn't deal with the pain and discipline when they could have, right? And they're dealing now with the pain of regret. And that's so sad because it doesn't need to be that way. We want hopefully the people listening, just pick up the phone, give us a call, because otherwise it can be a problem.
Yeah, it can. And it's something that, it's sad, right? It's unfortunate because it's something that could have been addressed relatively easily, right? I mean, sure, it takes a little bit of time, takes some conversation, but at the end of the day, it doesn't take years to put together a plan. It's something that can be done in a relatively short order. And here's the deal. It's a plan for the rest of your life. So it could not be more important, and it's something that you've got to put together.
The funny part about that, Casey mentioned, a lot of times people will spend more time wanting to plan a 2-week vacation than they do in wanting to deal with their retirement. So please pick up the phone, give us a call. If you've saved $250,000 or more, maybe you've worked at Boeing or have retired from Boeing, know somebody that has, just give us a call. Let's have a conversation about your tax situation. What about, we've talked a little bit about crypto, understanding that. What about, what do I do if I want to pass assets to my children? Please pick up the phone, give us a call.
All right, here's the phone number, 866-668-3625. That number again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies going to work best for you. We've got the appointments. Call now. They're complimentary, 866-668-3625. That's 866-668-3625. When we return, it's time for scenarios. We've gathered a handful. We'll throw them at the gents, see what they come up with next. Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle, and that's where you can find our team, Mark Stimpson, Casey Elkins, Craig Roth, and Steve Flynn. They've got well over 42 years combined experience in the retirement planning business, helping their clients, helping Seattle get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. A pleasure to jump on and just talk about all the topics that are out there that pertain to just the importance of planning. We've talked about crypto today. A lot of people are asking questions. We've talked about the stock market. It is volatile. Be aware of your risk level and what that means to your retirement. We've also talked about longevity. You're going to need a little bit more to pad those accounts because we're living longer. We're getting closer to that 100-year mark on average. So be aware of that. Now, scenarios, we gather these from around the country, and we've got a couple that we're going to go over today. Mark, you're going to start with this first one, and guys, just jump on this as a team. Here it is. They're starting to think retirement isn't a finish line. It's just a different kind of full-time job. What mindset shift helps people transition from saving for retirement to spending in retirement, but not only spending in retirement, doing it with confidence?
Yeah, this is something we love to share with our clients, that how important it is that you're not retiring from something, but you're retiring to something. I think it's just a mental shift like this question asks, because clients need to really start thinking about this a little earlier than a lot of people do. We've seen this in our office over the last several decades, and some are shocked, to say the least. We had a client not too long ago that retired, and within, 10 days or so, she was back in the office and didn't realize how that change was going to affect her like it did. Yep. I think what really ended up happening was she didn't realize how much of her social circle, which was her life, was tied up at work, right? Mm-hmm. And when that went away and you didn't have those as close a connections, now it doesn't mean when we retire we have to not have our work connections with individuals, because we can still call and text and get together, but it's not the same. We all know that, and I think planning for this matters. We've had some clients. I suggested maybe taking a gap year, right? Just like we do with our kids that maybe went to college. They weren't sure exactly what they were going to do, so after they got that degree, they took a year to kind of figure it out. Well, retirement can be like this, especially when and if you're not sure where you want to live. That's a big part of this. We've got clients now living all over the world, but I think of these clients that are in Thailand. It took a while to get that plan in place, right? And really think about it. Visit it. on multiple occasions to make sure that's something that you really want to do, because there's a lot of things to consider making moves like that. But again, it boils back to having a plan, because I love what this said. We struggle sometimes with clients that have been great savers, helping them become great spenders. And I think that's something we work really hard to give our clients confidence that they're going to be able to spend in retirement and really enjoy the retirement that they dreamed of, and it not turn out to be just a big fairy tale.
It really does come back to a mindset shift. It really does. And you know what? It's something, we listen to other financial shows. We watch the same shows that a lot of our clients watch. We hear other offices in the area on the radio. We hardly hear people talk about a mindset shift when you move to retirement. And I will say that is one of the biggest hurdles that people face. They feel like, well, what am I going to do when I don't work? That's why we're always talking about retiring to something, right? Yep. What do you want to do? Because we're meant to be busy, right? It's retirement should not be, well, I just don't go to work now and I sleep in and watch TV golf, and then I go to bed, right? I mean, you find something to do, find something you enjoy, find something that you're passionate about. But it is a mindset change from saving to spending, and it's okay, right? It's okay to go spend in retirement. Again, why did you save the money in the first place, right? Don't let the last 40 years of saving ruin the next 40 years of retirement because you're afraid to go live your retirement. That's the key behind all of this, right? Is the plan. That's why we're always talking about this plan, because the plan is what gives you the confidence to actually be able to go ahead and make it happen. You want to add something to that, Steve?
Yeah, and it says full-time job, and hopefully with a good plan in place, your full-time job isn't looking at the stock market to see if that's how your retirement's going to be.
Yeah.
Like, can I go out and spend some money today? How's the market doing? That isn't a good full-time job in retirement, we hope.
Yeah.
Well, you said it before. I mean, and I've heard it many, many times on this show. If you plan well, in essence, you're giving yourself permission to go spend your money.
Yep, that's it right there.
Right?
Right. It's like we say often to our clients, it is kind of like moving to another job, but instead of getting a paycheck, you're getting a paycheck, and you want to go out and spend that just like you would your pay.
Yeah, I love what Craig just mentioned, because I think it's important. That's why we're helping our clients to spend money now, a lot more on the front end. Right? They don't need, most of us don't need a big nest egg to pass on to our children. It's nice to have a legacy to leave behind some, but our clients have to come first. Their retirement has to come first. We talk about this all the time. This is about their retirement, not about their children's inheritance. Not that we don't want. I have 3 children, okay, and I want to leave behind something. Not very much, but a little bit, right? So again, we want to help our clients feel good and confident about spending now and show them that they can do it without getting stressed out about it. It's amazing how many people we've had them come in and they'll have a couple $1 million in their plan, and they're living on $6,000 a month, and they don't want that to change. They're scared if they get into the $2 million that somehow it's going to run out, and we have to show them how that's not a reality, right? It becomes something, and we can double that income and give them a lot more life now when they're healthy and can spend it. Because if we have money on the back end, once the health goes, how's the spending going to work, right? It's not. You're going to be spending it and staying most likely at home, or possibly being, in a bed for
Care
a long
facility
time
or something.
Yeah. I mean, have a plan, have permission to go spend your money, the fun money, the play checks, but that takes a plan. And feel good about it. Have confidence as you move towards your retirement. Now, listen, we're going to open up the appointments here towards the end of the show, but I do want to remind you there's a very, very good resource, and it's a book. It's called Break the Glass. Again, Casey and Mark put this out. They're very proud of it. It can be a resource for you when it comes to your retirement planning. Simply go to breaktheglassbook.com. That's breaktheglassbook.com. This is a free resource for you. You can just sign up for it. They'll ship the book out to you. Again, it's breaktheglassbook.com, and you will receive that book in the mail. And again, a good resource for retirement planning. All right, we got time for one more scenario. Steve, we're going to start off with you on this one. They heard they could retire early and live on less, but didn't realize the less that less part meant the heating bill might win the winter. So what do people often underestimate when they jump into early retirement? A lot of people want to do it, but you might want to test the waters before you do.
Well, that doesn't sound like a fun retirement straight away there. On what basis were they looking to retire early? It maybe doesn't look like they had a plan in place. If you've got the resources and the means to be able to retire early, we'll be the first to tell you that. But I think we need to sit down and have a conversation and look at, well, let's look normal retirement age, 65. Maybe we're going to plan for 20 years with average life expectancy. If we're going to bump that anytime forward, could be a fear that we run out of money. Mm-hmm. We factor in Social Security. When's the best time to take that? Optimally, it would be at 70, but have you got the resources to be able to finance your retirement then? Taxes, inflation. I mean, there's just so many things to think about here when talking about retiring at normal age, least of all retiring early.
Yeah, retiring early is almost kind of like living longer, right? I mean, it really is, right? Because what you're talking about is extending your retirement. So people are worried about outliving their retirement, even if they retire at, let's say, 70. They're worried about living to 100 because how do I make my money last the next 30 years? Well, if you retire at 50 and you live to 80, that's the same 30 years, right? It's the same complication. But if you retire at 50 and live to 90 or 95 or 100, that's even more complicated. So it really is a big thing. It's something to consider. And you know what? I think one of the biggest things that gets overlooked when people are retiring early is the cost of health care before they get to Medicare. That's probably one of the biggest hurdles that we have to face, aside from the obvious, making your money last longer than if you were to retire later. Aside from that, it's probably comes back to healthcare as one of the biggest things, and underestimating what that cost is. And what the options are going to be, right? Mm-hmm. And then the other piece to that is that you're also just more exposed to the market, right? You really are, because you have to play this very careful game where I have to have growth in my investments, because if I retire at 50, there's a good chance that I've got a 40-year retirement ahead of me. And so I have to have growth in that money, but I also need income from that money right now. And you have to save in the right type of account to be able to take income out before you get to age 59 and a half. So, there are layers to that early retirement. We have helped a lot of people retire early, but it's a much more in-depth conversation because it takes the time, it takes those conversations to make sure that it can be successful and that you're going to be able to do it. And it all comes back again, to the conversation, to having a plan. So if you're considering retiring early, if you're worried about that, if you're considering retiring early and you want to know what Medicare is going to look like or what medical is going to look like before you get to Medicare age, and when you should start your Social Security and how long your assets will last before you get to Social Security age, and even how long they're going to last beyond that, that's what the plan is all about. This is your opportunity. It takes a simple phone call. You'll come into the office. We'll have a conversation. The conversation is going to be 100% about you and 100% about what you want. You want your retirement to look like, and we'll help you build a custom retirement plan. So again, this is your opportunity to get that plan. Don't hesitate. Pick up the phone and give us a call.
All right, complimentary appointment awaits. Call this number, 866-668-3625. That's 866-668-3625. Again, if you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. These are complimentary. You're leaving the checkbook at home. It's an opportunity for you to come in and just talk about your own retirement scenario. How are you going to handle the income portion of it? Taxes, health care, long-term care. What's your longevity? What's your risk level? I mean, all these questions can be answered, but all you've got to do to get started is call. Again, that number, 866-668-3625. A complimentary appointment awaits, 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management, is in the books. For Mark Stimpson, Casey Elkins, Craig Roth, and Steve Flynn, I'm Morgan Patrick. See you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.